Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. I am so excited, grateful, and thankful for life to be with you here this morning as we get prepared for another promising edition of the Extra Speed Live. So let's confirm that we are good to go this morning as usual. So I want to see HI in the comment section. Type in hi, as this will give me a positive feedback that we are good to go this morning. So if you can see my screen and you can hear my voice without distortions, let me see your feedbacks in the comment section, and let's get this party started. Okay, I'm trying to see what we have here in the comment section, loading up my chat. And so we can find, okay, 90675, good morning to you. 845, all right. Okay, 9738 8603 5466. Hello, Dino, how are you? Thank you very much. Hello, Carrie. Good morning to you. Glad to have you around this morning. All right, all right. So I would want to take this as a positive confirmation that we are good to go this morning. So it's on this note, I welcome you all to another edition of our weekly price action based technical analysis. Well, into this session, we are going to be delving deep into an insightful analysis of the assets on our watch list for the week. Remember, we have the US All Spot, the USTech100, GBPUSD, and of course the XAUUSD. So we are going to be going to the chart, providing valuable insight through a comprehensive price action based perspective. So in the next 1 hour, we shall explore the current market structure using simple but powerful setups to uncover ideas that can potentially shape our trading decisions ahead of the New York session. As usual, we shall be relying on the power of trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of all the instruments on our watch list for today. And for those who are joining us for the first time, you are highly welcome on board. Well, what we simply do here is to come together as a community, gathering in anticipation of the New York trading sessions. During this time, we normally review and manage our current positions while also aiming ourselves to aiming to position ourselves strategically for the day's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and I implore you to be part of our subsequent sessions too as well. The more time you spend with us, the more you will get to understand how this works and eventually be able to use the information you have gathered here to make your own independent decision on your account. So once again, I welcome you all on board. So the last 24-48 hours has been quite interesting for us all in this community, as we have been able to scoop in significant profits despite the fact that we had some couple of losses, I think on the GBP USD and I think one other pair, but thank goodness we were able to recoup whatever we lost, and then was able to be part of the positive side of our portfolio. So we shall be reviewing that in a moment, but before we go into the chart, you know how we do it. The first thing we want to be doing right now is to go right into the economic calendar, and you know how important the economic calendar is. These fundamental factors we see on the economic calendars often manifest on the chart in technical patterns, and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And by doing this, we have a better timing as well as positioning ourselves in such a way that we can catch any potential opportunity prior, during, and even after the event. So for today, Wednesday, July 19th, we have a series of high impact event coming in from the United Kingdom economic docket, and this already happened about 5 hours ago, as you can see here, and that is the what's it called right now, the consumer price index. And this is normally released by the National Statistics, and it is a measure of price movement by the comparison between retail prices of a representative shopping basket of goods and services. This is a very good indicator to measure the inflation and changing purchasing trend. And of course, a high reading is always considered to be a positive signal for the pounds, and a low reading, of course, is considered to be negative. Now, looking at the data we have here, the previous data came in at 0.7%, and there was a consensus of a 0.4%. But unfortunately, the actual data that came in this morning came in way below expectation at 0.1%, giving us a negative deviation of minus 1.24. Now, with this information here, you know this is not a good or a palatable scenario for the pound sterling. And in fact, we saw how the pound sterling dropped significantly in immediate reaction to this data. So we are going to be looking at that in a moment when we dive right into the pound sterling's chart. So with the information we have gathered on the economic calendar, these are all the high impact event we have for today. So we shall be relying on our technical skills to manage our existing position while we also position ourselves ahead of the New York trading session. So with that being said, here we shall be diving right into the chart, and as usual, the first instrument on our watch list for today is, of course, the US All Spot. Now, on the US All Spot, a very interesting setup we have here since the beginning of the week, as we have been buying this commodity in the last 24 hours, giving us a significant amount of profit, as at this point in time, we are currently running with about of close to 200 pips in profit at this point. So before we go into the details of what is going on right now, let's first of all take a quick look at what really happened at the beginning of the week and what incited the idea of buying or selling this commodity through the course of the week. Now, the first thing I want us to do here is to take a quick holistic view of what is really going on the 1 hour time frame. Now, if you look at this structure closely, remember that we acknowledge that this price action here is looking very bullish, and to further emphasize the strength of the buyers here, we connected the series of higher lows to give us an ascending trend line to work with. We even took it a step further to connect the series of higher highs, giving us another ascending trend line, giving us an ascending channel to work with for the week. Now, things got a little bit more interesting during the course of last week, as that was where our center of focus was at the beginning of the week. And one of the key features of the market structure last week was this beautiful demand zone identified around the $75-ish. And within this area, we had a demand zone as we saw how sellers struggled as soon as price action got into that area throughout the course of last week. Now we saw what happened here. We saw the significant breakout of the structure, giving us a platform for bullish momentum. We saw as soon as price came back again to drop to the downside, we saw buy pressure resume one more time. The same thing also happened midweek. As you can see here, sellers found it difficult to break down that structure. Then on the last trading day of last week, we saw another attempt by the sellers to break through and was met with strong resistance from the buyers to give us a beautiful demand zone to work with. Then prior to the beginning of the week, we were thinking that we could see reversal patterns or buy pressure around this demand zone to incite a bullish momentum, but that was not what happened here. As we saw, the week started with a bearish gap. Then we saw price action caught within a range just right below our key level at the $75.25 level. Though we had a couple of sell positions at the beginning of the week, but we saw here that those moves did not last long. Remember, we saw the breakdown of the range. We sold here again. And at both instances, we saw how price action moved about 80 pips, 50 pips respectively. And if we had moved our stop loss accordingly, like just we normally do in this community, when price action significantly moves in our favor, we move our stop losses to secure the position. And if you had done that correctly, you would have been taken out with a modest size of profit, or at a worst case scenario, break even. And if you remember what we saw here yesterday, we saw a very interesting pattern in this market revealing the potentials that buyers might likely take over the market. And one of the things we saw here was the way price action was reacting to the lowest point it has gotten to this week at the $73.75 level. So we saw here that when price gets into the structure, we saw our buyers come in to negate all potentials by the sellers. The same thing also happened here during the later part of the New York session. As you can see, sellers did not even have the momentum to even get close to that demand zone. And during the early hours of yesterday, we also acknowledged a sharp rejection of the structure, giving us an idea that we are likely going to be buying at least for yesterday's trading session. And one thing I mentioned here yesterday is that we are not going to consider selling the US oil spot unless a breakdown of that demand zone happens, taking out all this buy position there to give us a confirmation to join that decline to the downside. And of course, this never happened. Hence, the idea of buying was more on our radar for yesterday's trading session. And remember, we had ourselves positioned just right above the $74.45 level to capture our first buy position for the week. And since then, we have been buying the US oil spot. And remember, we also identified multiple levels where we said we were going to be utilizing it to maximize the potential of this bullish move. So we had key levels at the $75 area where we said we were going to be buying the breakout retest, adding more position to our existing trade. We also had another breakout retest of the $75.25 level to capitalize on this bullish move. So it has been quite an interesting week for us, and congratulations to everyone who was resilient and stable, and in fact being on standby to catch these opportunities. Well done to you guys for being on standby, and you know how we do it. Whenever price action has moved significantly well in our favor, we want to of course be moving all our stop losses to secure the current buy position. And from the look of things right now, based on this current market structure, I will be suggesting that anywhere around the $75.25 or below it seems most appropriate to secure this current position, while we of course want to give enough room for price action to breed, with the anticipation that we could have a retest, a retracement back to gain some momentum for an uptrend continuation. So now with a well secured position at this point in time, what is going to be our next plan on the US All Spot for today? Well, this morning while I was trying to decipher how price action is going to be playing out for today, I want to call our attention to something I made emphasis on here yesterday, and that is the demand zone that we have here. And I told us all that if price action finds higher heights and comes within that zone, that any buy pressure around this area will give us an opportunity to buy, as price action will be considered to be back within the buyer's territory. And for the fact that price still remains above this demand zone, I'm of the opinion that we'll continue to look out for more buying opportunities in this market. So while doing this, I was able to identify a new resistant level. So our center of focus for today is around this resistant level at the $75.85 area, which happens to be the highest point price action got to during yesterday's trading session. Now, I wanted to have my buy stop order above that structure, which has already been triggered, though I'm running a loss on that one. And let me quickly say this here. For those who are already profitable on the US All Spot, you can afford to leverage on the profit you had made so far this week to test waters around the $75.85 level to see if a buy position there is going to click. But if you are not yet in the US oil trade, that is, this is your first time trading the US oil for this week, then I will advise you to remain patient for the breakout retest of the structure. Now we already have a breakout of the structure. Price action has come into the structure to retest it, and I hope that we will continue to see signs that will support the idea of buying, which will come in the form of multiple rejection or buying pressure from this area, and in fact it could transition into a reversal pattern to inside another wave of bullish momentum. So at this point, you could have a buy stop order above the $75.85 level, since we already cited the breakout of that structure, and let's hope that price action will continue to the upside. Stop losses should be dovetailing to about, let's see, about 30 to 40 pips thereabouts, so that we can give enough room for price action to breathe. So at this point in time, this is what we are going to be looking out for to buy the XAUUSD. So things are still looking very bullish at this point. But one thing for sure, you know how we do it in this community, we would always want to keep tabs with the opposite direction too as well. So we want to consider the potentials that the sellers also have, so that whenever a bearish momentum begins, we are also on standby to catch that move. Now, one of the things we are going to be doing here to be able to capitalize on this move, first of all, I want to acknowledge a trend line here, which of course I think we are going to be using to guide trading activity for today. So I don't like this one. I don't like the extension of this trend line. So let me just remove it so that, so it's not even that, okay. Okay, let me do it like this. So I want to project this trend line into the new pivot lows we have here. So I would like to give it a different color to emphasize its importance based on this current structure. So I will just give it a wine color and make it a little bit thicker, so we have something like this. Now going into the, if you look at the structure closely, let's see why that is. We saw how this area has been a major determinant. We saw the breakout, we saw the breakdown retest, and we saw here that since price broke out of this trend line yesterday, price has remained above the trend line. And we saw pivot highs, pivot lows rather, inciting another move to the upside. So this trend line here is very, very important. So you indeed want to mark this trend line on your chart right now. So as it's going to be a major yardstick to guide our trading activity for today. So what this simply means here is that if price continues to remain above these trend lines, we shall feel comfortable in our buy position while we also look out for more opportunities to buy. And another advantage of this trend line is that it will help us to be able to determine an appropriate zone or level for our stop losses. So our stop losses will just be right below the trend line. Of course, if the trend line is broken to the downside, then we will start thinking of selling. So now looking at the structure here, what will make us want to sell the US All Spot for today is for initially I wanted price to break down this $75.25 level, which of course is our key level for the week. And you know that whenever we have price breaking down our key level, we want to be looking out for patterns and structures that will support the idea of selling, where a retest will of course give us more opportunity to join. However, because of this trend line that we have here, I'm thinking that we can maximize the potential of joining the bearish move early enough, even before the breakdown of that key level happens. And so if we do have a breakdown of this trend line, then a retest of structure followed by selling pressure on our lower time frame will give us the privilege of joining a sell move, and then a sell stop order below the key level at a $75.25 level will welcome more opportunities to capitalize on that bearish move to the downside. So this is how we are going to be managing our trades for today on the US All Spot. So if you do have any questions whatsoever as regards to this current market setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before I move on to the next instrument. Then there's another thing I would like us to acknowledge here. I told you that this market outlook is still looking very bullish, and we should be having a buy stop order above the $75.85 level. Then I also noticed another high here, which we have around the zone, which is located at the $76.20 level. You also want to be marking this level out on your chart, as we can use it to add more buy position to our existing trade. So let's see how price action will play out in the next couple of hours, as we still look forward to more buying opportunities. But if a breakdown of the descending trend line happens, then we will have no other choice than to start considering selling this commodity. So if you have any questions whatsoever, feel free to let me know in the comment section, and I will be taking the next 10 to 15 seconds to read through the comments and see if there are any questions before we move on to the next instrument. And you can as well take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we're all on the same page here. So we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list is the USTech100, another phenomenal trading setup we had here yesterday. And in fact, price action since the beginning of this week has moved significantly well in our favor. Now let's run through this quickly on how the week started for us and how we what incited the idea of buying this option. So at the beginning of the week, if you remember vividly, we were thinking that price action will be going bearish. And remember, on a 4 hours time frame, we identified this very important key level, which was supposed to be guiding our trading activity for this week. And you know how we use our key levels in this community, as if price remains above the key level, we of course want to be looking out for patterns and structures that will support the idea of buying. But if price action breaks down the key level, we want to be looking out for patterns and structures that will support the idea of selling. And in addition to the key level identified here, we also noticed something that was looking like a reversal pattern, which was looking more of an head and shoulder pattern right here. And we said if this leads to the breakdown of the 15,550, we shall be considering selling. Then in addition to this reversal pattern was this beautiful range we saw between the 15,600 and the 15,530 to emphasize the level of indecision at this point in time. And you know how we do it in this community. When price action falls into this kind of range, we want to wait patiently for structures to mature. So we shall be looking out for either a breakdown of that support line, which of course shares a confluence with the neckline of that reversal pattern to incite a sell-off, which of course never happened, as you can see. Then we waited for another breakout retest to welcome the buy position, and it was at this point we had our first buy position for the week, and since then we have been buying the USTech 100. Now, yesterday's trading session, I told us all to move all stop losses to secure the current buy position just right below the 15,675. I told us all to secure this buy position as we look out for more opportunities to buy. And one thing I also mentioned here yesterday is that we have a range where price action has been confined within the 15,725 and of course the 15,675 to give us a flat channel to work with. And you know how we do it. Whenever we have this kind of structure, we either wait for the breakdown retest of the structure to incite a bearish move, or the breakout retest of the resistance line to welcome more opportunities to buy. Now, with the situation we have here, remember I told us all that we have an ascending trend line, which of course could be respected. And let me show you what I'm talking about here. So we had this ascending trend line, which of course has been respected in the last 1 week. And we said price could still test it at this area to incite another wave. So if we are going to be selling, we should ensure that we move all stop losses accordingly as soon as price action moves significantly well in our favor. And in fact, we saw price moved about 70 pips. If you are taking advantage of that, I do hope you moved your stop losses to secure the position, as this all bearish move turned out to be a false breakdown, as we saw an engulfing bullish candle spring out from that ascending trend line to trigger our buy stop order at a 15,725 during the New York session yesterday, and since then price action has been finding higher highs in this market. So we were taken out of the previous buy position, remember, around this area. So we had a new buy position triggered at the breakout of the 15,725, and if you are still in this position at this point, you will currently be running with about 137 pips in profit. So for those who are taking advantage of this opportunity, for those who have been patient to be part of this move, well done to you for being on standby to have caught this move. So if you're still in a buy position right now, you definitely want to be moving all stop losses to secure the current buy position. And from the way things are looking at this point in time, I will be suggesting that anywhere below the 15,830 and the 15,800 zone seems appropriate to secure this current buy position as we wait out and see how the market will be reacting to this pattern we have here. Now, with a well-secured position at this point in time, what is going to be our next plan for today? Are we still going to be buying the USTech 100, or is this time to start doing profit-taking activities? Now, if you look at the structure closely, we have a peak already, the highest point where price action has been for this week, which is situated at the $15,875 level. So we indeed want to mark out those levels on our chart right now, as we will be needing it as a reference point to guide our trading activities for today. So we have the 15,875 level marked out on our chart. This is the highest point price action has been for this week. And one interesting thing we noticed here since the later part of the New York session yesterday is the fact that as soon as price tested the 15,875 level, we saw a sharp rejection of that area. Now, in the last couple of hours, price action has been oscillating around that area, as you can see here, with attempt by the sellers to continue to negate that bullish attempt. Now, the question at this point in time is, will this turn out to be a reversal pattern which could come in the form of a double top structure? And a double top structure from a technical standpoint is considered to be a very strong reversal pattern. Now, if we take into consideration the impulsive move that started here yesterday into the peak here, price came back into that area around the 15,815, and if this selling pressure here persists, that is, buyers find it difficult to break the previous high to have a new high, then we could start considering a retracement move to the downside. And if this is going to be the case, of course, we want to have a platform that will help us to validate the potency of that neck reversal pattern. So in that regard, we want to be identifying our neckline, which of course will fall at exactly the 15,815 level. So what this simply means here is that if price action ever breaks down the 15,815 level, then we shall consider joining a bearish move to the downside. Now, how far this bearish move is going to go is what we don't know at this point. And of course, a breakdown of the 15,815 will be considered to be a counter trend opportunity. So if that is going to happen, we want to be joining a breakdown retest of structure and ensure that you are on standby to move your stop losses accordingly to secure your position. So you know this is a counter trend opportunity, and of course anything could happen. Buyers could come in considering the strong bullish momentum. So if the bearish momentum moves, we move our stop losses. Now there are structures here that we are going to be taking into consideration if price action continues to drop to the downside. So we have one here at the 15,725, which shares a confluence with that ascending trend line we identified on the higher time frame. Now that area is a center of recon. That is, when price comes into that area, we want to ensure that all stop losses are secured as we wait out and see how price action will be reacting to that zone. Now, if you look at this structure closely, you will see that this level was broken yesterday after multiple selling pressure around this area. We saw what happened here. We saw what happened here on Friday of last week's trading session. And if price action comes into this area, you would agree with me that we shall be at a very critical point in the market where, depending on what happens around this area, will determine what our next line of action will be. So let us look at the potentials of buyers and sellers around that area. Now, if price action drops into the 15,725 and we begin to see buy pressure around this area, then this could be a sign that price action may likely respect that ascending trend line one more time to incite an uptrend continuation. And in fact, look at this from a technical standpoint. Price just broke out this level yesterday, and you know, from a technical standpoint, when price breaks out of a key level like this, we expect it to come back and retest the structure at some point in time to incite a trend continuation to the upside. So these are the things I'm going to be looking at on this one. But if price action upon getting into this level, it then breaks down the 15,725, then at this point we want to start considering a strong sell-off in this market and adding more position to our existing trade. So this is how we are going to be managing our trades, sell opportunity if price action ever breaks down that zone at the 15,815 level. Now, if this is not going to be the case, that is, if price does not drop to the downside and instead continues to climb higher highs, then we shall be getting ready to add more buy position to our existing trade. Now, this old pattern we have here, where price is confined between the 15,875 and the 15,815, in as much as it has a tendency of giving us a reversal pattern, we cannot ignore the potentials of buyers transitioning this pattern into a trend continuation pattern. And this, of course, will happen in the form of a breakout retest of the 15,875 to incite that uptrend continuation. Now, for those of us who are already profitable on the USTech100, we can afford to have a buy stop order sitting above the 15,875 to test waters around that area and see if this buy position is going to click. Of course, we have a lot of profits so far this week we can leverage on to test waters around that area. Then our stop losses should not be more than about 40 to 45 pips thereabout. Of course, we do need to give price action room to breathe. However, if this is your first position on the USTech100, then I will suggest that you wait for a breakout of that structure to happen first of all. Signs that buyers have taken out all the sell positions around this area to give us a signal of an uptrend continuation. But remember, we are not getting too excited as we'll still need a confirmation to happen. So as soon as we have a breakout of that resistance level, we scale down into our lower time frame. It could be the 5, 10 or 15 minutes time frame to look out for signs that buyers are gradually gaining momentum, and this would reflect on the chart as a retest of structure, after which then you can now join an uptrend continuation. So these are my views here on the USTech100. As you can see, we have a simple setup and our center of focus is basically between the 15,875 and of course the 15,815, where the breakout or breakdown will be leading us into what the next line of action will be for today. So you want to be marking these levels out on your chart, as you will be needing them as a reference point to guide your trading activity for today. So if you have any questions whatsoever as regards to what I just explained, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. All right, I see your comment 8867. You just have to be accompanied. I don't understand what you mean there. Can 786, Aki88, good morning to you, Aki88. How are you doing today? Thanks for the flowers. I appreciate them. Can 786, good afternoon to you. I'm fine, thank you, Aki88, and trust you are doing very well. Nest57, I see your comment. Thank you for checking in on us. So, in the absence of no questions here, I want to assume that we are on the same page. So, we shall be moving on to the next instrument on our watch list. So, the next instrument on our watch list is the the GBP USD. Another very interesting position we had on the GBP USD yesterday, as we had a very strong bearish move, which hit my TP target, had the 1.29400 area, giving me over 280 pips in profit on this single move. So before we go into the details of what really happened, let's look at how the week started for us here on the GBP USD. So I shall zoom right into trading activities on Monday. So this is what we saw here on Monday morning while we were trying to decipher what the market will be doing for the week. Now, one of the things we saw in this market was the series of lower highs which existed since the second half of last week. And in fact, what we did at the beginning of the week was to connect the series of lower highs to give us a trend line to work with, at least for the first half of the week. And one of the things we said on the at the beginning of the week is that the trend line here will continue to help us to guide our positions. That is, if price remains below the trend line, we will continue to look out for selling opportunities. But if price breaks out of the trend line, then we shall be looking out for opportunities to buy. Then, in addition to this trend line here, was this key level at the 1.3100 area, which was our key level for the week. And remember, if price remains below our key level, of course, we want to be looking out for patterns and structures that will support the idea of selling. Now, we saw how price action fell into a range at the beginning of the week, confined between the 1.3100 level and the 1.30820 area, to give us an insight into the level of indecision at that point in time. And you know how we do it whenever we have this kind of flat channel. We want to wait for a breakout for buying opportunities or breakdown for selling opportunities. And I told you during our live session yesterday that I took a buy position here, which unfortunately went into a loss for me on that one, as price action went all the way down to trigger our sell stop order below the structure. And in fact, it moved about how many pips? It moved about 20 pips, 30 pips thereabouts before that bullish traction began. And if you had moved your stop losses accordingly, you would have been taken out at a modest size of profit, or at a worst case scenario, break even. Now, during our live session yesterday, we acknowledged another interesting setup which was gradually unfolding as we prepare for the New York session. And the setup here is this low here. So when we saw price action tested the 1.3060 level, we saw price big since that moment continue to find higher lows. And the appearance of these higher lows for us yesterday was a clear sign that price action might likely be going to the upside. And to find a yardstick to guide our trading activity, we connected the series of higher lows, which gave us an ascending trend line to work with for yesterday's trading session. And prior to the trading session, I told us all that I had a buy position. We had our sell stop loss move to secure the position, taking out of that position, and you saw what happened here. Price action broke down the trend line and of course the 1.30820 to signal a bearish move. And remember, we also identified another level at the 1.30750, which we said we are going to be using to maximize the potential of the bearish move. And as you can see here, since yesterday, price action has since been dropping to the downside, and coupled with the development from the CPI data that came in this morning, negative for the pound sterling, we saw how the pounds reacted to that event, pushing price further to the downside. So it has been quite a very profitable week for us on the GBPUSD, though we had some losses at the beginning of the week, but we were able to recoup the losses we incurred, and of course had some profit on top of it. And for those who are taking advantage of these opportunities, well done to you for being on standby to have caught this move. So personally, I hit my TP target at the 1.294, but for those who still have a sell position running at this point in time, I will be suggesting that you want to be moving your stop losses anywhere around the 1.298 and the 1.296 area. Of course, we want to be giving enough room for price action to breathe. So now, with this position well secured at this point, congratulations to you once again. So let's see how we are going to be managing our positions for today. How we continue. Are we going to be selling again, or is it time to start thinking of buying the pound sterling? Now let's go into the higher time frame. I want to show you something from an holistic point of view, which of course will be a major determinant of how we are going to be taking positions for today. Now, I want to refresh our memories on what we saw at the beginning of the week on the GBPUSD. Remember, we saw this ascending channel after connecting the series of higher highs and higher lows. Let me show you quickly so that you can see. So we had these higher lows connected, and then we also had the higher highs connected to as well. Now within the channel we had another ascending trend line, so we already had an ascending channel to work with for the week. And in as much as this was identified, I told us all that our center of focus is going to be around that key level here at the 1.318, where I said if a breakdown of this 1.3183100 level happens, followed by continued selling pressure below that structure, we might likely see price action drop back into either this ascending trend line or the support line of the ascending channel, where depending on what happens here will determine what our next line of action will be for today. Now, you will agree with me that we are at a critical point in the market where price action is currently oscillating around that ascending trend line. Now, there's another important level here which makes this whole confluence very interesting and promising for trading opportunities for today, and that is the 1.29300 level. Now, if we go to as far back as the second week of this month, we saw how that same 1.29300 level had been a major determinant of price action. It was initially a selling niche here on the 11th of this month before we saw the breakout of the structure happened on that same day. Then we saw price came back to retest the following day here to push this bullish momentum to the upside. Now, following the bullish momentum we witnessed last week, price is back into that level. And you know, from a technical standpoint, when a breakout of a structure such as this one happens, we are likely going to be seeing price to come back, retest that structure, and in fact respect that ascending trend line to incite another wave of bullish momentum. So right now that price is back into that structure, we need a whole lot of patience here to see how the market will be reacting to this level. So you would agree with me that we are at a critical point in the market. So we want to see what patterns or structures will come up around this area to decide what our next line of action will be. So we are going to be looking at either buying pressure on our lower time frame to join a trend continuation to the upside, or we are going to be looking forward to a breakdown retest of the structure to be adding more position, especially for those who still have a position running at this point. So now going back into the lower time frame, as this is where we'll begin to see things more clearly on this current market structure. So since our center of focus is going to be around the 1.293 for today, you want to be marking this level out, very important, as this will determine what our next line of action will be. Now, what I did here, especially for us all who have been very profitable on the GBPUSD so far this week, we can afford to place a sell stop order below the 1.293, leveraging on the profit we had made so far this week to test waters around that area and see if the bearish move is going to click. So I already have a sell position triggered at this point in time with my stop losses dovetailing to about let's see how many pips that is, about 40 pips thereabout, as I need to give enough room for price action to breathe. So if this continues like this, then we shall be in for more opportunities to sell. However, if you are just joining us and this is going to be your first position on the GBPUSD, I would suggest that since you don't have any profit so far this week to leverage on, then you want to be a conscious trader at this point by waiting for the breakdown to happen. Remember, we are not getting too excited here. Then wait for a retest of structure where price could either retest the 1.293 or the ascending trend line here, followed by continued selling pressure on our lower time frame to give us an opportunity to sell. So this is how we are going to be selling the GBP USD for today. But if the buy pressure we've been observing here in the last 4 hours continue, then we might likely be seeing a reversal pattern, price respecting the ascending trend line one more time to incite another wave of bullish momentum. Now, if a bullish momentum is going to be happening here, definitely we want to be seeing a reversal pattern which could come in the form of either a double bottom structure to incite another wave to the upside, or it could even come in the form of a head and shoulder pattern where we shall be identifying our neckline to capitalize on a trend continuation to the upside. So these are the things we are going to be looking at today. So if we do see a double bottom structure, head and shoulder pattern, or a falling wedge, or whichever reversal pattern you can think of, identify the neckline of the reversal pattern and use it as a yardstick to guide the uptrend continuation to the upside. So we are at a very critical confluence in the market. Mark this zone out, as this is where another significant move is going to be coming in from. So let's see how price action will play out in the next 24 hours. And of course, we shall be here tomorrow to review how well this is doing. So at this point in time, if you have any questions, feel free to let me know in the comment section. And if you I don't know, if you have any questions, let me know in the comment section. So let's see, I'll be taking the next 10 to 15 seconds to see if there are any questions, after which we shall be moving into the last instrument for today. In fact, I have less than 3 minutes left and I'll need to run through our last instrument for today, which is my favorite pair. All right, so let's run through the last instrument for today. So the last instrument on our watch list for today is the XAUUSD, my favorite. So on the XAUUSD, we had a phenomenal experience this week so far. We have been buying this commodity since the beginning of the week, and in fact we saw how price action had moved significantly well in our favor. And for those who had bought the XAUUSD and capitalized on the breakout of key levels, you will be currently running with a minimum of 200 pips, and if you are taking this multiple entry, you will be getting close to around 400 pips on this one. Congratulations to everyone who are taking advantage of this opportunity. Now, moving right into the New York session today, what is going to be our plans? Well, first of all, I would like to tell you here that you, of course, want to be moving your stop losses on your current position to secure this position. And for me personally, I'm suggesting that anywhere below the 1,973 and the 1,690 will be an area to move our stop losses to secure this current position, as anything could happen at this point. Now, going into the New York session today, what is going to be our plans? How do we intend to manage our positions on the XAUUSD? So I have a new chart which I, of course, shared on my public platform. So I would like you to see it too as well. And this is what I was able to come up with. Now, looking at what has been going on here since the beginning of this week, it is quite obvious that price action has been bullish. And we went further to connect the series of higher lows here to give us an ascending trend line to work with. So price action had consistently respected this ascending trend line, giving us a clue that buyers are still very strong in this market. And you know how we do it in this community. You know how we use our ascending trend lines. As long as price action remains above the ascending trend line, we have no other choice than to continue to look out for buying opportunities. Now, with the situation here, it makes quite a whole lot of sense that we continue to look out for buying opportunities if price remains above the structure. And one of the ways to capitalize on a potential uptrend continuation is for price action to break out, retest the 1,979 to add more position, and then have another buy stop order above the 1,984 to maximize the potential of this move. However, in as much as the potentials of buyers still looks very promising in this market, as long as price remains above the ascending trend line, it is very important for us to take note of what the sellers have been doing in this market since the New York session began yesterday. Now, look at what happened here during the New York session. We saw as soon as price got into the 1,984 level, we begin to see sudden pressure resume in the market. And since price action tested at high this week, we are yet to see price action find new highs since then. Instead of finding new highs, what we see in this market are lower highs. Now you see how the 1,979 has been negating all attempts of the buyers to break out of the structure, which is something that is to be taken with great care. Now, with this situation here, will the selling pressure below the 1,979 persist? And if this persists, we are likely going to be seeing a bearish move to the downside. And for us to capitalize on this move, then definitely I want to be seeing price action break down the 1,973 for me to join the bearish move to the downside. Then we can, of course, add more position if price action breaks down the $1,967.50 level. However, before we can join that move, price will first of all have to break down the ascending trend line, which for me could be a very beautiful sign for us to join early enough before even the breakdown of the $1,972.30 level happens. So if that is going to be the case here, that is if I see a breakdown of this trend line, so what I want to do here is to mark a level around that trend line, which will also share a confluence with it. I want to look for a psychological area, so let's use the 1,975 level, and I will want to give this a blue color. So you want to be marking this level out on your chart. So we have the 1,975, a very strong psychological area considering the round figure of that price. So a breakdown retest of that level for me should be something to look out for selling opportunities. So let's go back to the candle chart right now. Let's look at what is going on here. So now one interesting thing about the 1,975 is the fact that it has been a strong buying niche since the early hours of today. As we can see, our sellers have been struggling around that level to break price to the downside. And in fact, in the last couple of hours, this has been persistent in this market. Now, the tendency of price action still respecting the ascending trend line is still very there in the market to push price to the upside and break out of the 1,979 to incite a trend continuation. However, if price action insists on breaking down the ascending trend line, which of course appears to be happening right now, then a retest of structure on our lower time frame will be what we are looking forward to sell below the 1,975, then have a sell stop order below the $1,972.30 level to maximize the bearish momentum to the downside. A retest of structure also will welcome more opportunities, and if price goes on to break down the $1,967.50 level, we definitely want to be adding more position to our existing trade. So this is how we are going to be managing our position on the XAUUSD today. So you want to be marking these levels out. Most importantly is that ascending trend line, which of course is our major yardstick to guide trading activities for today. So let's see how price action will play out in the next 24 hours. And by tomorrow, we shall be here again to review how well this instrument has been doing. So it's on this note I want to call it a day here. It has been a wonderful moment with you guys. I really do appreciate your time here. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you become in using the information you gather here to make your independent trading decision. I see your comment here, 59150042. So you were asking that how to put the buy or sell button easily before take loss. Sincerely, I'm not sure I understand what you mean there. So I would rather appreciate you rephrase your statement so that we can all understand, so I can prefer an answer to that one. So let's see if you can drop something before the end of the session so that I can attend to it. So on this note, I want to wish you best of luck. So I hope you are able to mark out those levels on your charts, and so that you can use them as a reference point to guide your trading activity. You can as well screenshot my screen, which is much more easier, and use it as a reference point when you're about to make your independent decisions today. So at this point, I'm very confident that we are well equipped to be able to take advantage of any potential opportunity during the New York session today. So, and I implore that we remain very patient, wait for our structures to mature before we join any positions today. All running positions, ensure you move your stop losses, secure your position, as you don't want to lose out on whatever you had made so far. So on this note, I wish you all best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument has been doing, and of course get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.